Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, stocks like HDFC Bank, IndusInd Bank, as they give out strong Q4 business updates. And we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our live feed and we'll have them addressed. But before we get our guests on board, let's take a look at what the headlines are looking like this morning. Well, Wall Street snaps a 4-day winning streak as the US labor market shows signs of slowing down. Meanwhile, Asia remains subdued as major markets like China, Hong Kong and Taiwan remain shut for trade. The adjusted SGX Nifty is indicating a higher start for the Indian markets above that 17,500 mark. Precious metals surge, gold rallies to over $2,000 an ounce as the US economy shows signs of slowing. Crude flat in volatile trade as investors weigh production cuts along with weak economic data from the United States. HDFC Bank sees deposit growth at an 11-quarter high. IndusInd Bank's loan growth hits a 15-quarter high, while Bajaj Finance reports strong AUM growth. Well, it's an extraordinary moment in US history. Donald Trump appears in Manhattan court and surrenders to face criminal charges stemming from 2016 hush money payments to adult movie star Stormy Daniels. The former president of the United States pleads not guilty to 34 counts of falsifying business records. And in an address to his supporters, he lashes out at his successor Joe Biden, saying that the country is going to hell. Well, let's bring on board then our technical expert for today, Milan Vaishnav of Gemstone Equity Research is joining in this morning. Good morning, Milan. Good to have you on the show. Well, we did manage to end above that around that 17,400 mark on Monday. And if you look at the SGX Nifty, it is subdued in today's session, but the adjusted level is hinting at a start above that 17,500 mark. So what are the kind of levels that you will be watching out for in trade on the Nifty as well as the Bank Nifty for today?
Very good morning, Danita. It's really nice connecting with you all. Coming to the markets, we are opening today after a gap of 1 day, as yesterday was a trading holiday. And if we take into account yesterday's positive closing of the SGX, we are still slated to open modestly in the positive. But that being said, the levels that I'm looking for is 17,450 for the Nifty, because 17,450 to 17,490 is one of the most stringent resistance area for the markets. So I expect that we might open on modestly positive note, but may also struggle struggle a lot to go above 17,450. So I expect a good amount of resistance to kicking between 17,450 and 500 levels. So I think that's the place. If the traders and investors are, traders are long, that's where we should start protecting their profits and get aggressive on the markets only above 17,500, because it will take a while before it goes above that point.
Right. Well, those are the levels to watch out for. But let's also talk about stocks like Reliance Industries, ONGC, Oil India. Government has, cut the windfall tax on crude to nil. And that, in fact, earlier was somewhere around 3,500 rupees per ton. In fact, on diesel exports also, the duty has been cut to half, 0.50 rupees a litre from 1 rupee a litre. So, given the fact that, this is a breather of sorts coming in for these companies, how would you look at playing some of these companies in today's session? Reliance Industries, ONGC and Oil India.
Oil India and ONGC, they have been into a decent uptrend since last many weeks, and this uptrend is likely to continue. Coming to Reliance, Reliance has shown signs of intermediate trend reversal. So keeping the immediate low of 2,100 as a bottom, I feel that the stock is now due for some upward revision in price.
Right. Let's also talk about the metals basket then. Milan, CLSA has come out with a report on Hindalco. It has a buy rating with the target price of 550 rupees or thereabouts. The company has maintained its medium-term guidance and reiterated its capex, and that has been paced out properly over the next fiscal. In fact, Novelis also gave a very, has in fact maintained its guidance in the medium term. So the outlook on Hindalco remains positive when it comes to CLSA. Would you expect some kind of an upside on this stock, given the fact that it has given out a pretty okayish update for the fourth quarter?
Yes, I will, because if we look at Hindalco from a technical perspective, the last phase of the downside had seen a development or has seen an emergence of a strong bullish divergence of the RSI against the price. And generally, when this happens, following a downtrend, it lays a strong ground for a potential technical rebound. That is the technical aspect. And if we add to that the weakening of the dollar index and slipping below 102 levels is going to aid this move. So I feel Hindalco, yes, there is an upside left, and the most immediate levels that we can watch out for, or rather we can look for in Hindalco, would be 420, 425.
Now, since we are talking about the metals basket, I also want to get in your thoughts on Vedanta. There are reports that say that, Hindustan Zinc may not act on its proposal to buy Vedanta's zinc business, as it is facing a lot of opposition from the government as well, right? When you look at Vedanta, the stock has shaved off somewhere around 10% on a YTD basis. But, over the last week, it hasn't done all that badly. And on Monday, it gained somewhere around 3%. Do you think this will come in as a dampener and, the stock may edge lower from here?
Yes, it can, and besides that, the Vedanta has been consolidating just below the 200 DMA, which is presently placed at around 283 levels. So long as it is above 283, you will continue to see the stock struggling, and major thrust will come only if it is going convincingly above 284 levels. And if that happens, we can see it going up to 295, 298. But until that happens, I expect the stock to continue to resist to 284 levels.
Right, 284 levels are important one to watch out for on Vedanta. Let's also talk about some of these companies who will be reporting earnings. Of course, we will be starting out with the technology pack. So first of all, HCL Tech. JP Morgan has put the company on negative catalyst watch ahead of its fourth quarter number. It sees highest near-term risks for this particular IT company. We had seen the IT pack starting to outperform the index, but once again it came under pressure given the fact that there are macroeconomic uncertainties in the US, and that has been weighing in on the IT pack in recent times. So HCL Tech, what are the levels that you'll be watching out for on this one? More downside going forward?
See, when we talk about the outperformance of any sector, in this case IT, we always talk it in relative terms. So IT was relatively outperforming when we saw the Nifty, coming off from the highs of 18,000 to the levels that we just recently saw. IT did lose, but it lost very little, and therefore the relative outperformance was definitely there. But if we talk about the stocks, about stock specific, especially HCL Tech, HCL Tech had made a classical double top near 1140 levels, and since then it has been retracing under a declining channel. Right now it continues to remain in a secondary declining channel, and I see that upward momentum, meaningful upsides will come only above 1140. So from the current levels of 1098 or 1100 rupees, this 40-point gap is something that one should let go of, and some meaningful upsides would occur in HCL Tech only above 1140.
Right, meaningful uptick expected above 1140. But we have a couple of queries coming in from the IT pack. Since we were talking about that, I'd rather we take it up on the show. Prabhu has written in and he wants to know whether it is the right time to average Infosys, because he bought this counter at 1,500 rupees a share. Aside of that, we also have a query on KPIT Tech coming in from Akshay Gujarati. And he wants to know your thoughts on the stock, given the fact that, the stock has dropped somewhere around 11%. What would you advise these investors to do?
Right. Let me begin with Infosys. Infosys has laid some ground for a potential technical rebound and a pullback. So I think this is the time that he can add more to Infosys. He can accumulate Infosys at current levels. The possibilities of a technical rebound has increased because, again, the last phase of the downside has come with a bullish divergence of the RSI against the price. And this being a lead indicator, it generally behaves in a very quite reliable way when it comes to technical rebounds or forming of a potential bottom. So that being said, my suggestion on Infosys would be to continue to hold the original quantity that is holding. That is point one. Point two, he can add more, and whatever he adds, he should maintain a stop loss of close below 1350 on the incremental quantity that he adds.
Right, so that's the view on some of these IT stocks. Hold that thought, Milan. We'll come back to you, but let me also get on board on the show. We are joined by Lokendra Saini, who's the COO of EaseMyTrip, to understand the travel trends that are panning out for this summer season. Good morning, Lokendra. Good to have you on the show. So many long weekends this month as well as next month. How is the demand trend shaping up when it comes to summer travel going forward?
Good morning, and thank you for having me on the show. The summer is already showing peak signals for holiday season, and everyone is kind of almost ready with their backpacks. Like always, the surge is high on the family holidays. Families have already booked their holidays for India and international, followed by the couple and the solo travelers. This time we have seen a huge demand on the solo travelers, the adventure traveler. And I think that is a great sign, because that allows us also to, bring more unique and offbeat places for travelers to travel. I think, we are seeing almost 70% surge in demand from the previous year. The same Good Friday, we had almost, 30% more demand on flight bookings. And overall, we see this as a great summer beginning season for holidays.
Right. Well, you spoke about solo travel. That's a cue for me to pack my bags and go for a holiday. But tell me, the airfares have been skyrocketing. Hasn't that come out as a dampener for some of these travel plans, or you are witnessing quite strong bookings even then?
The bookings are definitely high and strong compared to last year, and also compared to 2019 numbers. But yes, having said that, the airfares are slightly on a higher side. But if you see the surge in the number of bookings, I think that factor is getting negated, perhaps because there is more demand than perhaps the supply is available. And I see great sign in people also booking train tickets as well, and that also has seen almost a 200% growth on our platform compared to last year. So overall, I think for travelers, the mode of transportation could be little limited, but their enthusiasm and their excitement and passion for travel is not getting any down.
Right. First of all, would you say that growth is back to pre-COVID levels now, given the fact that we saw such a surge in demand after the 3 waves of COVID and the lockdowns that we had seen? And secondly, is domestic demand driving growth for you all, or do you think it's a mix of both domestic as well as international?
See, domestic demand has grown far faster than as compared to the international numbers. And that's also probably because some of the countries are yet to open fully. And at some places, the visa restrictions and all have not been totally lifted. But yes, domestic has grown almost more than 70%, like I said. Having said that, in terms of the value terms, I think international has also contributed almost equal to the domestic numbers. But yes, we still hope another 30-40% more addition to the international numbers from where they are right now.
Right. There has been a resurgence in cases, in recent times. You've seen India reporting 1,000+ cases on a daily basis. Do you expect that to, play some kind of a spoil spot to these travel plans, or do you think that is, has been taken into stride? Because the fact that Health Ministry is saying that there is no need to panic, but we need to be alert. So given the recent surge, how would you look at the trends going forward?
See, we've already seen, a couple of waves of COVID, and, as a responsible citizen, we are all well aware of our responsibilities and the caution that we need to take. And, it gives me immense pleasure to share that, wherever I travel to airports, to railway stations, I see a lot of people, already taking that caution by wearing masks and all. But having said, the numbers are going very, very high. And I think COVID-related things are not creating any dampener whatsoever as of now. And just to reiterate, I think domestic holidays is seeing the surge in demand like never before. Almost 70% of our overall daily calls are only to explore new places, more places where they can go for holidays. And the numbers that we were expecting to achieve by the end of May, I think we will be in a good position to achieve them by 20th of April. So that says in itself that the demand is extremely high, and COVID is not making any impact whatsoever in the excitement.
Well, COVID is not having any major impact on travel plans. So, well, with that, Lokendra, thanks a lot for taking out time and joining us this morning. I hope to, in fact, I look forward to having a longer conversation with you. It's just that we are running out of time on the show. Well, thanks a lot for joining in. Well, let's go back to Milan in that case and talk about stocks like HDFC Bank and IndusInd Bank that have also come out with strong Q4 updates. What are your thoughts on some of these private banking names like ICICI Bank, HDFC Bank and IndusInd Bank? Which one amongst these three are looking attractive at this juncture?
Well, in order of preference, I would go for HDFC Bank and ICICI Bank first, and then for IndusInd. To come to HDFC Bank, when it hit a high point of 1640, sometime it was in November 2022. And since then, it has made a largely sideways move. And right now, it is staring at multiple resistance levels of 1815 to 1818. So there is a confluence area of resistance between 1815 and 1820. And if we see, 1625. I'm sorry, I'm looking at a wrong chart. Just give me 1 minute. Yeah, 1615. So there is a confluence area of resistance between 1615 and 1620. So if we see the stock moving above 1620, I expect a decent upside momentum in HDFC Bank. And which was the second stock the query was about?
IndusInd and ICICI. Among these two, which one would you prefer now?
Yes, I would be preferring ICICI Bank over IndusInd. The reason is that there are some signs of technical breakout from a sideways consolidation zone so far as ICICI is concerned, and it has tried to move above 880, which was a multiple resistance zone for the stock over the past couple of weeks. So I see some upside momentum happening in ICICI Bank so long as it is able to keep its head above 875. So the longer the time the stock stays above 875, higher are the chances that it will go on to test 900 to 910 levels in the immediate short term.
Right. So those are the levels to watch out for. ICICI Bank is the preferred pick when it comes to the banking pack. Let's also talk about Bajaj Finance. We have a query on this stock from Dr. Sayan, and for the long term as well as intraday trading as well. But looking at the stock, it has come up with its Q4 business update, and it's pretty strong given the fact that it has seen highest ever increase in customer franchisee in the year gone by, and it has in fact even seen highest ever new loans of $9.6 million in FY23. And AUM as well is up somewhere around 30% on a YOY basis. So, Bajaj Finance has been among the top losers on the Nifty over the last few trading sessions. This strong update coming in, do you think now is the time to look at buying into this counter now?
Yes, it is the time because Bajaj Finance again faced multiple resistances near 7,500 sometime in the last quarter of 2022. And since then, it underwent a significant corrective decline, which took it to below 5,500, 5,600 levels. So again, it has shown some some bullish divergences on the lead indicators and has tried to put a potential bottom in place. So it has not yet confirmed the bottom, but there are high chances that the bottom of 5,500 to 5,600 might get confirmed. So keeping a stop loss of 5,500 on the stock, one can start looking at accumulating the stock with each decline, or at least allocate 50% of the available capital to this stock at the current levels.
Right. So that's the call on Bajaj Finance. Let's also shift focus to the FMCG pack. There is a query coming in on Marico this morning. Adil Javed has written in and he wants to know your thoughts. The company has also come out with its Q4 update, and it expects margins to expand in the fourth quarter. In fact, Nomura has also come out with a neutral rating on the stock, but it has a target price of somewhere around 565 or thereabouts. Over the last 5 sessions or so, the stock hasn't done much. It has gained somewhere around 0.5% or so. So how would you advise investors to play this one now?
I would advise the traders to stay away from the stock, because this is basically not a trading stock. And for a long period of time, we will just see it oscillating back and forth in 5 to 10% range. When it comes to investors, I do understand that a target of 565 has been placed, but anybody who is indulging into Marico should do it with a long-term, at least a medium-term investment horizon of 2 to 3 years, because it's not a stock that would give you kind of returns that one would expect over the short term. Even if it gives you some return over the short term, that will come with an opportunity cost of not gaining enough in some other stocks, which are expected to move faster. So on a personal note, I'm a bit of neutral on the stock. If you are an investor, you can stay invested with a medium-term time horizon of 2 to 3 years. For short-term traders and investors, I think they should look out for better stocks with a bit of a higher beta and bit of a more trading range that they have. I would avoid Marico from a shorter time frame perspective.
Well, avoid Marico for the shorter term. Moving on to the next query. This is coming in from Rahul Kumar, and he wants to know your thoughts on VA Tech Wabag. Now, this stock was up somewhere around 3.5% or so in Monday's session, and over the last 5 sessions, it has gained somewhere around 8% or so. So it is in a steady up move. Would you advise investors to ride into this rally and maybe look at buying into this one?
Buying into this one, I think I would prefer to wait. There is a major resistance for the stock at between 370 and 375. So in fact, I would keep trailing my stop losses if I'm long in the stock, and would add more and make a fresh entry above only above 375. I'll wait for a breakout to open, because if we buy now and with a major resistance at around 370, 375, the new entry will not come with a favorable risk to reward ratio. So I would prefer to wait. I'll enter afresh in VA Tech above 375 and not now.
Right, look at VA Tech above 375. Next query is coming in from Shrestha, and she has a query on Gland Pharma. Now, this stock has come off quite a bit from its 52-week highs, and it's trading around that 12,080 to 1,280 to 1,300 range. What are the levels that one should be watching out for on this one?
Gland Pharma, after a very long time, it is showing some signs of a bottom in place, some signs of an attempt to show a technical rebound. When I'm saying attempt, what I mean is that it has laid some ground, but there is no confirmation on the charts. But however, some kind of accumulation is seen if we examine the on-balance volume, which is the volume oscillator. So if you are holding Gland Pharma or you are trying to make a fresh entry, you can hold on to Gland Pharma if you're holding right now. And so far as making a fresh entry is concerned, you can make a fresh entry, but in that case, maintain a very strict stop loss of recent lows. That is, maintain a stop loss of 1140 on the stock, and you can at least start accumulating in bits and pieces in Gland Pharma. Not entirely at one go, but you can certainly allocate some portion of the capital into Gland Pharma at the current levels and maintain a stop loss of the close below most recent low. That is, you can approximately 1140 or something like that.
All right, Gland Pharma showing signs of bottoming out. Next query, let's take up on, this stock called Blue Star. Jagnesh has written in, and he wants to know your short-term and long-term view on this one. Now, on a YTD basis, this stock is up 16%, making its way towards its 52-week highs of 1,600 rupees or thereabouts. So what would you advise investors to do both for the short as well as long-term on this counter?
Are we talking about Blue Star? Blue
That's
Star
correct.
Technologies?
Blue Star.
All right. Blue Star, it has formed a potential top between 1540 and 1600 levels, because buying afresh, I would not recommend going long in the stock, at least at current levels. It is seen resisting to the 50 DMA. Let it close above 1410 levels. Let it close above 1400, 1410 levels. That's where some more momentum can come up the upside. So wait for the stock. There should not be any hurry to enter in the stock right now.
Right, so that's the call on Blue Star. I'm afraid with that, we have come to the end of this edition of Morning Trade. So no more queries. Thanks a lot for answering our queries. But before I let you go, leave us with 2 stock recommendations for the day.
Yeah, I am eyeing 2 stocks. One is JK Cement and Bharat Dynamics, BDL. One can enter into JK Cements above 2925 levels. Expect the targets of 3050 on the stock and maintain a stop loss of 2880. Another one, as I just said, it's BDL. One can buy above 990 with a target of 1045 and stop loss of 960. And while I say that, I would like to make it clear that this is a positional call. It's not an intraday call.
Right, JK Cement and Bharat Dynamics, 2 stock picks from Milan. Well, with that, Milan, thanks a lot for taking our time and joining us this morning and addressing all our viewer queries as well. Well, with that, we are completely timed out on this edition of Morning Trade. So it's a goodbye from me and the entire team that put the show together. But don't go anywhere, because coming up next is Opening Bell.